up, everybody? Danny Greco here, and unless you've been living in a cave or under a rock the past month or two, you've probably heard about the real estate market, not just locally, but anywhere, slowing down, and that's certainly true. That's certainly the case. Now, some of the media likes to sensationalize things or over-exaggerate on that slowdown, and that's where I want to touch base on that at the end of what I'm going to talk about here, but I want to also jump into the single-family home stats for July of 2022 and get right into those. So let's start with the city of Seattle. Now in July, the median sale price for a home in Seattle was $954,500. That's a 6.5% increase year over year. However, month over month, that's down from June when that price was just about $1 million, and it's down from May when that peaked at its all-time high of $1,025,000. So still year over year, it's positive, but compared to the last 2 months, it's gone down a little bit. Now, a lot of that is probably due to inventory. So in July, City of Seattle had 1.5 months of inventory. That's up from 1 month the month before. So quite a significant jump, 50% from month over month. And year over year is where we're starting to see things get pretty interesting too. Year over year, inventory is up 36.25% in Seattle. However, pending homes are down 36% and sold units are down 40%. So we're starting to see, we have been seeing this really, that despite there being more homes on the market, there's less sales that are taking place, which can only mean one thing: buyers are not engaged like they were a year ago. They are not buying these homes at the pace that they were a year ago. We'll see that with these other cities and municipalities as well. So looking at the east side, we know what a monster that's been all year, right? I mean, just insane what's been going on there. In July, the median sale price for a home on the east side was $1.42 million, which is still pretty crazy, and that's still a 6.7% year over year increase. However, month over month, that's down from $1.5 million in June and down from $1.722 million when it peaked in May. So just think about that. In 2 months, the median sale price for a home on the east side has come down $300,000. That is crazy. And again, that's largely in part due to the increased inventory. There was 2.5 months of inventory on the east side in July. In June, that was only at 1.63 months. So it came up basically a full point in just a month, which is pretty significant. So again, despite there being 242% more homes on the market this year compared to last year, there's 27% less homes that are going pending and 50% less units set. So if that doesn't speak to a lack of buyer demand, I don't know what does. So King County in general, seeing the same thing. The median sale price for a King County home in July was $890,000. That's up 2% year over year, but down month over month, where last month it registered at $938,000, and again May was the big one where it was just under $1 million at $998,000. So that's even come down about $110,000 in 2 months. Again, inventory being the main reason there. 1.89 months of inventory, which was a jump from 1.31 the month before. So again, we're seeing, for a long time, we were seeing the story was buyers are doing more with less. There was less homes on the market on a year over year basis, yet there were more sales taking place. We're now seeing the opposite of that, where there's more homes on the market, yet less sales taking place, which shouldn't make sense, right? So that leads that can only explain that buyers are just not as hungry for home ownership as they were a year ago. Now, that's not abnormal either, and I'll talk to that here in a second, just given the normal seasonality trends that we see this time of year. One of the last metric I'll talk about, my absorption rate metric that I use for the city of Seattle, registered lowest figure I've ever recorded since September of 2019. So again, the absorption rate in July of 2022 was its lowest recorded since September of 2019. That's basically a measure of buyer demand. So 2019 brings up a very important segue, because when we hear these numbers, and certainly there's significant inventory up 200%, sales down 50%, there's no doubt that's not significant, but we have to keep in mind, what are we comparing this to? We're comparing this to the years 2021, 2020, these were some of the most abnormal years in all of real estate. 2020 pandemic hit, things shut down, no homes went on the market, inventory was, suppressed. Inventory was already low, and it just kept things suppressed for a long time. Interest rates dropped to the floor in 2020 and 2021. Stock market was going crazy, so you had this perfect storm that was created. Buyers were, had cash flowing out of their pockets. Interest rates were at record lows. They were able to afford these crazy bidding wars on the limited amount of inventory that was available, which is why we saw some of these prices be so high. Now, as the stock market's crashed, there's less money in the pockets, there's more inventory out there. We're seeing this normalization take place, and normal is exactly the way I describe it, because 2019 was the last normal market that we saw. And this is normal to see this in these dog days of summer. It's normal to see buyer disengagement. They're fatigued, they're taking vacations, they're spending the weekends out on, the lake or whatever. They're just not engaged like they are at the beginning of the year. This is all normal. So when we look back at 2019 levels, we see that we're either at or still below inventory levels that we were back then. So it's going to be really interesting to kind of see how the rest of the year shapes up, but we have to be more farsighted and just can't always look at, month over month, year over year, given what abnormal years 2020 and 21 have been. So anyway, it's something we'll continue to look at for sure, but don't be too nearsighted that you can't see the forest from the trees.